Hi everyone, welcome back to the channel. This is breaking news. Shopee will be exiting India. As usual, this video is only for educational purpose only. Do not treat this as investment or any form of advice. Always do your own due diligence. Reuters reported the exit today, quoting management rationale to be global market uncertainties. I'll expand on this point and share my view later. You will also see the article mentioning that this is the second pullback after France within the same month, plus Free Fire was recently banned in India. In addition, C is facing pressure on multiple fronts. In terms of fundamentals, the article highlighted that we are looking at a loss-making company with a weak growth outlook. In terms of stock price, it has corrected significantly due to sector rotation, where investors move away from growth into value stocks. The decline in the valuation multiples of C Limited implies that the negative market sentiments towards the stock. If you take a step back, you'll notice the very bleak narrative from this news. While it is important to take in new information and not be biased towards status quo, we should also learn to distinguish facts from opinion, absorb key data points, think about them, and make an independent judgment. This is what I am hoping to do via this video with you. This is another article from Bloomberg. It mentioned about policies and the ground sentiments towards e-commerce companies like Shopee. Their analysts shared that India does not account for a large share of Shopee, unlike Brazil, and this exit can allow resources to be better focused on their core markets in Latin America. These two articles we have seen so far have presented many data points and information to help us assess the situation. I have put the link to these articles in the description below. Do check them out. I will now attempt to sum up our takeaways from the articles. We know that Shopee started in October last year, and with the announcement of the exit in March, this means the pilot has been around for 6 months before pulling the plug. This news comes on the back of the banning of Free Fire in India during February and the exit of another test market in France during the start of March. While Free Fire ban is likely to have significant impact, Shopee, France and India exits are unlikely to contribute much to the current financials. The article mentioned about 300 employees and 220k sellers, which do not sound a lot in the context of a large country like India. In my previous video, I estimated the number of orders in India to be approximately 2% of Shopee total volume. This is based on the article from MoneyControl that Shopee had a soft launch selling 100k orders per day, while Amazon and Flipkart were doing 2 to 2.5 million orders daily. If we assume a good ramp by Shopee up to a quarter of the two incumbents, we are talking about 500k orders a day, 60 million orders a month, 47 million a quarter. Comparing against 2 billion total Shopee orders in Q4 2021, 47 million from India will be about 2% of the total orders. This is the direct impact only, but we will also look at the implicit impact, which I will discuss more in the next slide. So what made Shopee decide to leave India? While the phrase global market uncertainties may sound generic, my view is that there is much to unpack here if we put into the context what is happening around the world, as well as what is the company currently going through. If you are not familiar with where the company stands now, I urge you to watch the video where I shared critical takeaways from the Q4 earnings. I have put the link to the video in the description below. If you're wondering if policies played a part in the decision, I do not have the real answer, but I think it's unlikely. In my previous video, I shared about the replies from the Competition Commission of India towards anti-competitive complaints that Shopee is abusing its dominant position in India. There were no big issues highlighted during the finding, as it highlighted that Shopee is only at its infancy stage and is already competing against the likes of Amazon and Flipkart. The challenge of a competitive market sounds more a likely reason for the exit. After all, management went in with a clear view to test out this market. If you Google for Amazon's experience, you will find articles pointing to challenges faced by the e-commerce giant in India. As we know, a competitive market requires lots of investments, especially for a new entrant to establish market share. Examples could be free shipping for sellers and discount vouchers to get new buyers on the platform. All this points to the need for more capital, and Shopee will have to be capital disciplined due to two reasons. Firstly, sector rotation has depressed stock price of growth companies, which means high cost of capital. The fortunate thing is that C managed to raise quite a bit of capital when its share price was high and now has a good war chest of cash. However, the internal cash generated in Free Fire may not continue firing going forward. Management has projected decline in top line in the gaming business as the economy opens up. This leads to my next 2 points on demand. The uncertain economic backdrop due to geopolitics and inflation, couple that with the normalization from online to offline activities, it won't be surprising to see growth in e-commerce tapering. We know that there is a secular tailwind, but we are looking at tough comparisons where past 2 years saw a huge rise in e-commerce sales. We may have to manage our expectations going forward in terms of the GMV growth that we see in C Limited. This is when we actually reflect on what has happened and form a view if there's issue with execution, did someone drop the ball, or is this a natural course of testing out new markets and no big deal? The discussion will be really subjective, so pardon me if you find me sitting on the fence. I think there are lots of nuances, and to be honest, I have not formed a strong view yet, so I'll just present both sides of the view. It will be great if you can share your perspective in the comments. The one thing we need to be clear here is that we are talking about ending a pilot. We are not looking at mismanagement or failure in any existing core markets. New markets like Poland, France, Spain, and India are test markets for a reason. More importantly, we are looking at highly diverse markets, which means you can never be sure a strategy that works well in one place will work well in others as well. Hyper-localization is a critical go-to-market strategy for e-commerce companies. That means we need strong entrepreneurial spirit, the mentality of willing to try out new things, new markets, and also move out of one's comfort zone. For example, Limited was born out of operating in Southeast Asia. They managed to do well in the region and move off quickly to Latin America, and that growth mindset led to the group results in Brazil today. As of Q4, management shared that there are more than 140 million orders, and the Brazil market is growing at 400% year on year. In a nutshell, if you view the exit as the end of a pilot, then it's not entirely a failure and the exit is not that big a news. The second point of discussion has even more nuances. One obvious argument is that exiting India will probably mean less costs incurred to fight a competitive market. This makes sense as I mentioned in the previous slide. Free Fire used to be a big profit contributor but is facing slowdown, and it also costs more to raise capital. In addition, management has communicated in Q4 results that the mature markets like Southeast Asia and Taiwan are moving towards positive adjusted EBITDA. Realizing the fruits of the capital through showing profits or even less loss is an attractive proposition. This is the opportunity to convince investors that the unit economics and the operating model do works. However, I am investing in companies like Limited for growth. I can't help but think of the potential a huge market like India can bring to Shopee if things have gone out well. The loss in optionality is a real pity here. To sum what I have read, I feel that the management still has the hunger to grow and try out new things. While doing so, they have the discipline to end the pilot before it materially hurts the company, and this is really important from the perspective of sound and disciplined capital allocation. I know it is tough as an investor to receive multiple negative news in consecutive months, so it's really key to hold a long-term view and develop your own conviction. Please let me know your thoughts by commenting below. Don't forget to subscribe to the channel if you like the content. Thanks for listening.